Hey, good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for Monday, February 2nd. We are in February, not what you wanted to see in the grains, probably what you did want to see in the livestock. Livestock higher across the board. Fat cattle up 270, feeder cattle up almost $6, lean hogs up a buck 50. Smallest herd in 75 years, continued buying there, showing up. It had been interesting trade. We've had a tremendous rally off those off the lows, over $70 in feeders, over $30 in fats. It looks like the market wants to take another run up at the contract high. So a great recovery for anybody that was upset when we had that nasty sell off. Pretty much got 85, 90% of it back. A great opportunity in the grain market. Lower across the board. March corn down 2.5 at 425 and 3/4. D's corn um, down a penny and a quarter at 454 and 3/4. March beans down 4 cents. Although another interesting trading day. Another 13-cent trading range from 64 to 51. In the November beans, a high of 78 and a low of 68. We did finish the day at 1075. I mean, it's going to be fighting words until we can get those new crop beans above $11. And for the new crop corn, at 454 and 3/4, I don't think anybody's going to get happy until we get north of 475, 480. I know there's some guys that telling me they can't make any money until it's 550, but it is what it is. Everybody's got their number, right? But I think that if we get a chance to get back up to the 480, 490, that would be a blessing. Um, in the wheat market, down 9.5 cents in Kansas City, down 10 and a quarter cents in Chicago. Just nothing holding that market up after we'd had a nice rally to the highest prices we had since November. So a 3-month high last week, and it can't get any follow through. You got to watch March Chicago wheat. If we can get above 555, 560, then maybe we have something to do. There's an old high out there at 578. But when you get right down to it, wheat is kind of fighting for its life here in this sideways trading range. It is about a 50-cent trading range, basically just under $5 to just over 550. That may be where we're stuck here for a while until we get a story. And you're starting to see, the managed money, they're not even really interested in trading grains. There's not a lot of volatility. There's not a lot of interest there. I think that they've got their hands full trading silver and um, crude oil. Crude oil poked its head again. It was down lower today because the weather warmed up, I guess, and you saw the correction in diesel. Just there's a lot of other opportunities out there besides grains right now for the speculative funds to get involved. Grains don't really have a story. The grains are range bound. If you didn't get my weekly wrap, please call me or email me. I'll send it to you. I broke down the monthly charts, which they can really help you get a better picture of what the risk is out there. You can see why anybody bullish or bearish, we're stuck in this trading range, but there is some risk if we do drift lower. And that's what you want to do if you're a producer. You want to protect against a slow grinding market, into May or June. Again, I sound like I'm somebody, I feel like I'm a broken record, but this market makes me feel a lot like 2010. 2010, we had kind of negative fundamentals. We had a negative USDA report in January. We traded sideways into May and then got hammered going into the June um, final acres report, and that's what saved us. Final acres report, and then we got a little bit of weather, and we were off to the races. So this is shaping up to be a very tough year. No two ways to argue about it. So just make sure that you defend what you can. Keep your puts very, very cheap. I don't think this is the time where you want to be getting involved in doubling up with accumulators or stuff like that. Because if we do get a weather market this year, you don't want to give all that away to the person that promised you something today. It may sound pretty good today, but if we were to get a weather market, you've got to make sure that you don't leave all that money on the table if we get that type of recovery. So at this point, that's what we're looking for. Fundamentals remain negative. We need some sort of a weather story to really get us going. So on that note, I'm going to let y'all go. This is Chris Robinson, Robinson Ag Marketing. I did post kind of an introductory webinar today. Anybody out there, if you're curious about who I am, what I offer, what my services are, um, you can download that link and listen to it at your leisure. It's not very long. It's about a 6 or 7 minute meeting. I do outline the stuff that I offer for clients and interested parties. And if you'd like to talk to me directly, give me a call, 312-638-8868. If you like my stuff, if you hate my stuff, give me a call. We'll talk about it. All right. Have a great day.